Today, we're going to talk about the latest innovations in DeFi and what the heck they are. What are zero-day futures? The latest in the bot wars, Unibot versus Banana Gun, and even potentially, guys, the next GMX. What's going on in a market where everything is sideways and boring? On this channel, we go into all alpha, keep you up to date on everything that's going on in the crypto world. Because let's face it, in this market, there's all a little bit of degen of us who like to look for opportunities to make money when everything else is completely flat sideways. On this channel, we bring you the alpha that you need to know to take advantage of what's going on, because there is always a bull market if you know where to look. So let's get into it, guys. My name is Kyle Chasse. I've been here in crypto for 11 years, bringing you the latest and hottest alpha and research. Guys, this is the only channel that you really need to go to if you really have some degen in your heart and you want to make some profits in this boring market. So let's get into it. And before we do, I just need to warn you guys that I don't have a lot of time to go into all these things in depth. So I am endorsing nothing here. This is pure degen shit, right? And you have to be willing, or as Ivan says, have your big boy pants on. I am taking a small percentage of my portfolio and I am playing around with these things like they are a shitcoin casino. And I would hope that you, if you choose to do your own research and participate in these things, that you proceed with extreme caution. With that being said, that little disclaimer out of the way, let's get into it, guys. So HXRO, let's just call it Hero. I don't know if that's how it's pronounced, but for today, we're going to call it Hero Network. They introduced something called zero-day futures. This is really, really cool. One of the things I love about this is the decentralized narrative. In fact, everything that we talk about today is this on-chain alpha. Long gone, I hope. And this is not true yet, but I'm looking forward to the day when centralized exchanges and centralized products like Celsius and these kind of things, FTX, I would love to see them become irrelevant. Unfortunately, they're not yet, but as we start to see some narratives like account abstraction and other really cool things on the decentralized on-chain narrative and on-chain decentralized projects are getting built with better UX, better UI, better onboarding, this gets me excited, right? So let's talk about what are zero-day futures. This is the latest narrative that has been popping off in the DeFi world, in the degen world, in the place where you need to be looking. So quick little short intro video here. Okay, so introducing zero-day futures, a new derivatives contract that simplifies short-term speculation on any crypto asset with an on-chain oracle. Basically, what they're doing is allowing you to trade futures with a very short 25-hour window. So this is the dopamine hit, right? This is, again, kind of in line with on-chain gaming, the on-chain casinos, on-chain gambling. It's not, it is actually just that, right? It's another game that people are playing, going long and short on meme coins, essentially. And of course, there's going to be other futures contracts in there as well, some legitimate ones. But the real interesting use case there is when you have something that comes up. I didn't pull up the chart, but I guess a few days ago, there's something called Dorkle or something. It popped off with like $25 million of volume. That would be a perfect case of something like this that would go on a ZDF. And Hero is or HXRO is the protocol that launched zero-day futures as infrastructure. So they're white labeling this out to anybody who wants to use it. I'll get into the protocol that first integrated it and if that's a play that you might want to look into. So similar to standard futures or perp contract, these may be traded both long and short during the life of the contract. Any open positions at the expiration that are not closed or rolled will simply settle back to their trading account in the form of USDC. The simple structure allows traders to easily speculate both long and short on their favorite crypto assets, including ZDFs, on top of blue chips like BTC and ETH, as well as the latest trending altcoins. So while the perpetual futures have been a common vehicle for crypto speculation, retail activity has been limited due to them being overly complex. ZDFs provide a more simplified trading solution. ZDF's key features. Simple format for short-term, margin-based speculation, daily expiration with guaranteed USDC settlements, settlement to the underlying asset price oracle at expiration, no intraday funding payments, no need to borrow the underlying asset in order to short it, can be created by anyone on any asset provided it has an on-chain oracle to reference the underlying asset price. Now they're using the HXRO's infrastructure, right? They are the guys who created this, and we'll get into if HXRO is a good play, and if they have revenue sharing and what they're kind of doing briefly. But let me know in the comments below if you'd like a video that goes more in depth, because they've actually introduced some really cool technology, and just this video alone has made me want to look into it a bit more. So participation, opening the floodgates. Participation by market makers is critical as a critical provider of liquidity in both spot and derivatives markets. Has been historically disincentivized from participating in perps markets on underlying tokens with low liquidity due to varying limiting factors. Because of the guaranteed daily USD settlement, market makers and liquidity providers no longer have to worry about being hung in a position they cannot get out of within a reasonable time period or at all. ZDFs will encourage the engagement of market makers who were previously reluctant to participate in providing liquidity to an illiquid crypto asset. Zero-day futures are powered exclusively by HXRO's network, an order book-based liquidity via Dexterity protocol, and the Spandex risk engine. So this is the real technology behind what HXRO has been building, a decentralized order book engine for liquidity with the Dexterity protocol and the risk engine. This is really interesting. This is the same kind of technology that very advanced exchanges like Bybit or Femix, whatever, use. And this is doing it all in a decentralized way. I'm telling you guys, it's a really exciting day when you start to see some of this technology being built in a way that is more user-friendly and on-chain, decentralized, fully transparent. So you can go into learning more about zero-day futures, but this gives you the high level of what they are. Now, NOLO Bot is the first protocol that introduced zero-day futures. They also introduced something else from HXRO, their perps bot a while back, and they asked the community, which token would you want to see first on ZDFs? And you can see that this is really good engagement for this kind of really boring bear market, but they chose ticker Bitcoin. And so it was obviously the most in demand. And so now you can go trade perps. You don't have to wait for a centralized exchange to go trade to list ticker Bitcoin as a perpetual future in order for you to trade it. You can now go do it on NOLO Bot. Very cool, opening up things the same way that that's what is it called? Like that. Oh my god. Anyway, Braveheart. What is it? Uniswap. Thank you. Uniswap. The same way that Uniswap allows anybody to create a liquidity pool. You don't have to wait for centralized exchange listings. This is great. I mean, this is just more and more innovation. This actually makes me really happy. The first zero-day futures contract on Harry Potter, Obama, Sonic 10 Inu, ticker Bitcoin, is now live and available for all Hero Dexterity powered dApps and automated trading systems to list for trading. So you can see now this is live, and on NOLO has integrated it, as you can see here. So we get into, and then of course they're doing some promotional thing. I don't know if NOLOBot plans on doing this type of fee split with everything they're doing, or if it's just a first-time promotional thing to get some volume, to get some attention. But they're doing this revenue split where, for the first time ever, a DEX, 28.5% of the transaction fees for this ZDF will go toward Bitcoin, ticker Bitcoin, and NOLO buybacks. So this will create some buy pressure. How much volume will be traded, we don't know yet, but it's interesting to see nonetheless. So a play here, one of the plays here potentially is NOLO. This is how you can get some direct exposure into these zero-day futures. We'll see. They could become, this is brand new, guys. This is brand new. This could become a huge narrative in this market, the same way that Unibot took off this year. We could see something like NOLO take off this year, but one thing you have to take into consideration is that this open source tech from HXRO is available to anybody. So if NOLO starts skyrocketing right now, what's to prevent others from integrating it? It's a good question, right? But you do see that this is a 12-hour chart. You do see at the past 24 hours or 48 hours actually a nice little pump. But this market cap right now is only total market cap of 3.7 million. Uh, it's an interesting play here, guys. You can see Dubs is pumping too. We've talked about that quite a bit on the channel. So the other play is the underlying protocol who's actually building all this interesting tech. Now, again, this really makes me want to go in and learn more about what they're doing. And I will, and I'll let you guys know about it. But here you can see 61% of the supply is circulating. So again, we have to go in and look at exactly, the emission schedule here and how much inflation we can expect to see if this is a good play. How are these other 39% of tokens being held and used? Are they held by a team, a treasury, a DAO? These are all great questions that I don't have answers for you right now, but this is something I'll be looking at closer. If I was signed into my account right now, I would add it to my watch list, but I will go back and check it out, and I will try to bring you guys kind of my 2 cents on it. Really cool technology has been built so far. Makes me pretty bullish to definitely dig in deeper on this. So let's switch to the bot wars. Banana Gun versus Unibot. So we had the announcement of the pre-sale today, or pre-sale actually happening today. Sorry, excuse me. And of course, it's going to sell out. Look how much how much engagement is here. How many impressions? 210,000 views. This is going to be one hell of a launch. And in a market, again, as boring as this, to see this kind of excitement around something it's fun. It's just simply fun. It's like it gives us something to do, and when there's nothing else to do, literally nothing else. So, but I want to point out one thing to you here, right? The tokenomics aren't bad. Really what this comes down to, and I'll get into this in just a second, is the revenue share model and competition. Competition is a good thing. It forces people to adapt, and we'll get into that in a second. But I just want to call out one thing here that kind of caught my attention as a potential red flag or something to potentially be careful of. Now, if anyone from the Banana Gun team wants to chime in the comments below and let me know why we shouldn't be worried about this, please go ahead and do it. But I want to point out here that this is a weird sentence. So the treasury has 65.8% of supply. That's a lot. Now, if it was all of the tokens locked and vest, you don't even have the time period here of the linear vest. So you don't know what's happening here, but this is the complicated part. Majority locked. Majority means 51%, right? So technically, this could be, over 30% of tokens in the hands of the developers, which could be potentially, I'm not saying that they're going to do this, but it could be easily dumped into the market because maybe they're not locked. And, majority could be 99% of the 65%. I don't know. But I thought it was funny language, and it'd be nice if it was a little bit more transparent, but it is what it is. See, here you have more transparency, but I'm also confused. 5% locked, 2 years, linear vest for 3 years, rev share disabled, rev share enabled. Okay, gotcha. Okay, so here they're getting, that's actually really interesting. Linear vest for 3 years, but they're getting revenue share. Okay, so they're getting revenue share on their 5% of their tokens that the team is holding. Okay, that makes sense. It's actually a good model. I actually like that. And then they're saying, hey, if we're around for a long time, for 8 years, then we get the rest of this unlocked at that point. It looks like what the team really wants to do is, that's cool. They want to provide value, generate a lot of revenue, and they're going to be getting, 5% of their tokens can count toward revenue share. So yeah, so if they're generating a lot of revenue, then the team makes revenue. That makes a lot of sense to me. Now, this is interesting, right? So they have a 4% and 4% tax. We talked about on my video when we talked about Banana Gun the first time, their tokenomics and how they would beat the 5 and 5 from Unibot. Now, this is where competition and free markets get really interesting. Let's see what Unibot says as a response to Banana Gun's fees. As our project matures, we have always intended to reduce Unibot trading tax, hence effective immediately. Basically, the team is reducing their share of the trading tax to bring the total from 5 to 4%. Plus, starting on September 15th, all token holders eligible for revenue sharing will receive 2% of the Unibot trading trading fees, I guess. The 2% was originally a limited time bonus for our holders that participated in our token migration of June 2023, with other eligible holders receiving 1%. The change means 2% across the board for good, which means holders are getting 50% of the total trading tax now. So again, what I said in the first video when I talked about these taxes and revenue share, in my opinion, so what we know, okay, so far, what do we know? We know that Banana Gun is a faster sniper bot. It's just faster. If you look on chain, you can see that Banana Gun is always in there because they're able to bundle these transactions and basically bribe the validators or the miners to make sure that they get in before Unibot. So they're faster, but it's less user-friendly at the moment. And Unibot has other innovations. They've got the bridge that they built. They've got Unibot X. And so there's a lot more innovation happening. And they are also the first mover. It'll be curious and interesting to see if Banana Gun is able to take away and steal a lot of market share. Again, what I think these protocols should be doing, and if you're listening to me, is that the one who shares the most profit. So if you're the team and developers, sure, whatever revenue you're generating, take out what you need to for operating expenses. This also keeps the development team, if they follow this model, honest and lean. Build as much as you can on a lean and agile methodology to create as much value as possible and redistribute as much value as possible back to your token holders. And you as the founders and team should have tokens as well, which means that you are getting that distribution as well. So if you're Banana Gun or you're Unibot, in my opinion, this is going to be a race to see who can develop the best token metric system or token economic model. And this is where things get really interesting, especially if Banana Gun proves to continue to innovate and develop to keep up or to keep up or get to the level of Unibot is for development. Who knows? Maybe Unibot just blows them away with what they're building, or maybe Banana Gun, leapfrogs them. It'll be interesting to see. But let's talk about how to play. This is a playbook for the upcoming Banana token launch. Now, remember, these launches are crazy, and this is hyped like crazy. So let's talk a little bit about exactly how you might want to play this, because you do not want to buy the pump in the beginning. Do not FOMO in. Remember, there's a big pre-sale. These pre-sale tokens are unlocked, and people will be looking to take profits. And this thing will likely pump to something like $20 million or whatever. So basically, there's going to be a bunch of sniping right when it comes out, which is going to pump the price like crazy, right? And as soon as that happens, the pre-sellers are going to be taking profits, right? Chase heavy, under 6 million, post-launch for a quick 2 to 4x. So if you can get under $6 million, a quick 2 to 4x is what this coin guru is anticipating. But here's what I will be doing, because I'm not going to be this fast. There's no way. And this is probably if you're only using a bot, can you actually achieve something like this? But here, wait for the pre-sellers to sell and buy in the period of consolidation. Buy the first 40% pullback, usually 60%, but not likely with this much hype and volume. Chance the chart looks like this few days, weeks after launch. Launch is around so the launch is anticipated to be fully diluted valuation of $1.6 million. The chances it goes to over 5 million within the first few minutes are extremely likely. The temporary top being 15 to 20 million. And then we'll see a slow bleed from the pre-sellers who are taking profit until we get to this floor of $2 to $5 million and this price of consolidation. Wait for the revenue share to kick in. Revenue share goes live. Then you see a catalyst, boom, and then fresh all-time highs. Great playbook. Shout out to Coin Guru for this. We also made something similar in my alpha group, and I believe in my Twitter as well. So make sure that you're following me over there. And if you're not in alpha group yet, don't worry. There'll be more opportunities to get in there. Just make sure that you are following me on X and that you have the notification turned on to make sure that you get my tweets as soon as I make them, so that you can get into things like the alpha group. So to wrap this up, is this the next GMX? Now, these guys are doing some incredibly interesting things. Yes, they forked GMX, but there's some really interesting things that they're doing that I want to take a minute to discuss, and why I think it's very interesting. One, of course, it's a very low market cap. Two, they just crossed $2 billion of trading revenue. The total value locked is pretty good at 21.66 million, and you've got $34.8 million in open interest. They've generated over $1 million in fees so far. Now, you can see that they've created a progressive web app, the same thing that Friendtech did. Friendtech created this progressive web app, and so has HMX. Now, this is allowing a nice centralized exchange-like experience, or an app that otherwise would have had to wait or try to get listed and approved by iOS, to simply make a web app that works seamlessly on an iOS device, which this will be the standard going forward. So I want to talk about some of the things that make HMX very, very interesting, that I think are, and I'll highlight the ones I think are particularly interesting. So despite the benefits of decentralization, on-chain perpetual trading faces challenges in delivering an exceptional user experience. High fees, limited collateral support, poor UX. Not until now, here's how HMX is overcoming these pain points to offer a sex-like UX on-chain. Very, very interesting. Again, this is all on-chain narratives. I love this. We don't need to go into FTX, reminding you of how shitty and how much trust people put in there. $9 billion evaporated overnight. And so we get into pain point number one, high fees. So they go into this on how they are lower fees than everybody else, their competitors. Now, that's interesting for one regard, but the other one is that GMX actually uses the fees to pump it back in the token economy. So I don't know that I'm going to mark this as, and we would have to get into the numbers and the economics behind it, but this is why token economics are so interesting, because one might perceive low fees as a benefit and, oh, this is so much better than something. But if you're a GMX token holder and you're banking on GMX increasing or HMX increasing in value, and the value accrual and value share and distribution is going back to the token holders, then you want more revenue, right? And so while this is an interesting point they make here, I don't have enough information to say if this is actually a benefit or a net negative, dressed as a benefit, right? Pain point number two, limited collateral support. Collateral management is another challenge in perpetual trading. To enhance capital efficiency for our traders, we provide cross-margin collateral management. This allows effective management of multiple positions without having to basically choose one collateral type. But wait, there's more. To enhance user experience, HMX also accepts multiple assets for collateral, including BTC, ETH, and ARB, and more. Now traders can retain their favorite spot holdings, implement various trading strategies, max long, carry trade. Pain point number three, poor UX. We talked about the progressive web app, very, very important. And this is one of the most interesting things here, right? Combine these features with such as advanced order types, sub-account support, one-click trading via account abstraction. Again, you're going to hear me on this channel go into account abstraction time and time and time again. It means that you're not going to have to approve your transaction every time with the MetaMask pop-up. And there's nothing more annoying, in my opinion, trying to use a dApp on your mobile device, and you have to connect MetaMask, and it changes the window over, MetaMask pops up. Oftentimes it doesn't communicate with it's just a really bad user experience. Account abstraction is going to be huge. And for that reason alone, I'm interested in going on HMX and trying it out and seeing what kind of user experience this delivers. Because the second that you get people frustrated on an application, we know how short people's attention spans are and how limited they're willing to be with their time and attention on trying something new. If it's not seamless, if it's not friction-free, you're going to lose a lot of potential customers right off the bat. So it's not just a perpetual crypto trading platform. You can also trade things like Forex and all these kind of things. So they give you another comparison. I'm not going to go into everything about HMX. I haven't done a lot of due diligence on it. For all I know, it could be a rug pull. However, it's extremely unlikely looking at all this volume. Like I said, they just surpassed $2 billion in trading volume. It's really, really picking up. and their user base is actually growing as well. And you can see right now it's at a total market cap of $19.4 million fully diluted valuation. GMX is up there at like over 300 million, I believe. So you're looking at a potential, and this is, of course, imagine that they get traction. It seems like they are. Will GMX adapt to be as seamless and as friction free as HMX? I don't know. We'll have to see. But for now, to me, this seems like a pretty good play considering the potential upside. And I would just advise to keep an eye on it and make sure that make sure that the volume continues, that the users continue to grow. But so far, to me, this looks extremely attractive. Again, guys, those are my plays, things I'm looking at today. Again, I am not going into huge due diligence here, so do your own research. These are things that I think could make 1, 2, 3, 5, maybe even 10x in this boring market. We've seen other projects like Rollbit and Unibot pull it off this year when the market's been terrible. I think that there's a lot more things coming up, or at least a few of them. And if we find these awesome narratives and we're right, then it's all worth it, right? Proceed with caution. Guys, I hope you found a lot of value in this one. I will catch you on the next one. See ya.